the gold to silver ratio is still way out of whack. It's still close to 100. I think it's like 98, something like that. And it should be closer to 60, 50, 40. And in a panic, eventually to 15 to 1. So we'll get there. We're not there yet. If you think you've run out of time to buy silver, you haven't. And silver really is the real play from here on out. And gold for just to keep you calm, and silver to if you really want the big gains. So wait until we get into the 40s. I think we'll be in the 40s for a few months, maybe a year, and then once we pass 50, we could already be in the end game.
A significant price surge to $50 or beyond requires a combination of factors, including increased industrial demand, a weakening dollar, and potentially a major economic event like a recession or geopolitical instability. MarketWatch attributes silver's lag to gold's safe haven appeal and delayed supply deficit pricing. However, with easing policies, increasing demand for green energy, and a tight supply, silver may soon break out, similar to 1980 or 2011, before the market fully catches on. In this video, endgame investor Rafi Farber expresses strong confidence in gold and silver, noting that white metal could exceed the $50 mark, signaling the start of a new phase for the metal. Farber points out that the gold to silver ratio is unusually high, although it could be as high as 15 to 1 during a panic. Based on his experience, Farber mentions gold and silver are set to rise, with the US dollar facing an inflate or die scenario. He points out that the Treasury has just $383 billion left and could run out by August or September. With bank reserves tied up in the repo market, the government will likely rely on the Federal Reserve to increase the money supply. Central banks around the world have dumped $48 billion in treasuries since late March alone. At the same time, central banks continue to buy gold, a trend that began years earlier. A recent survey by the World Gold Council found that geopolitical instability and potential trade conflicts are the chief reasons why central banks in emerging economies are shifting toward gold at a significantly faster rate than those in advanced economies. Looking at major areas, Farber notes oil futures show heavy trading but stable prices, reflecting strong buying and selling interest. Concurrently, Farber focuses on tracking the financial system's plumbing to anticipate the impending crunch. Before we dive into Rafi Farber's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
Gold and silver are not uncertain. They will continue to move up as the dollar must inflate or die. We're about $383 billion away from a dollar crunch, because that's how much money the Treasury has left. After they're finished spending that, they're going to have to raise more money, and the question is, where are they going to get it from? There's not enough dollars out there for them to raise. The bank reserves are all taken up by the repo markets. So there's going to be another inflation round, meaning another Fed printing money round, and that's going to happen sometime around August or September when they run out of cash. So gold and silver are going up. In terms of stocks, I really have no idea if this devolves into World War III and Iran becomes stubborn and Russia decides to, supply Iran with nuclear weapons or something. Dmitry Medvedev, I guess you could call him Putin's henchman. I don't even know how much power he actually has, but he was saying, oh, well, now nuclear armed countries are just going to decide to hand over nuclear warheads to Iran just to even the score. Which is ludicrous, but he's saying it. I'm not saying it. If that happens, then yeah, I guess, in the event of nuclear war, stocks would go down. But let's not even think about that. The only thing I'm sure of is that there's a dollar crunch coming around August when the Treasury runs out of cash, and I want to be in gold and silver before that happens. If I think the last resistance for silver is something like 37.50 something. I think that's the high from 2012, and from there it could go quickly into the 40s. But I don't think silver is going to move that much until we break 50. Once we break 50, we're in another era. I would say we'd breaken out of 1980 to 2012, 45-year resistance zone. But the gold to silver ratio is still way out of whack. It's still close to 100. I think it's like 98, something like that. And it should be closer to 60, 50, 40. And in a panic, eventually to 15 to 1. So we'll get there. We're not there yet. If you think you've run out of time to buy silver, you haven't. And silver really is the real play from here on out. And gold for just to keep you calm, and silver to if you really want the big gains. So wait until we get into the 40s. I think we'll be in the 40s for a few months, maybe a year, and then once we pass 50, we could already be in the end game. But who knows what the world's going to look like a few months from now? We're in flux. We're in a blender. So how can you make any predictions unless you're in the top intelligence strata of the international community? If you're the head of Mossad, maybe you know what's going on, but I have no idea. So I am mainly tracking the plumbing of the financial system and going as deep as I can to try to figure out when the final crunch will be, because I only think there's going to be one more. And on the Substack, there's a whole bunch of philosophical, monetary, what do you say? I feel like, not screeds, opuses, magnum, whatever, big, long articles explaining the nature of money and why it all goes back to gold and silver. So you understand that gold and silver are actually money right now, and everything else is its derivative. Once you understand that, and the articles on the Substack will help you really internalize that, then there's nothing that can really upend your speculation on gold and silver, which isn't even really a speculation. It's just divesting from the system and investing in money itself. Once you get that, you're home free, and it's just a matter of time. So I really try to get people to understand that, and in the meantime, where the plumbing of the financial system stands, when the clog is going to happen, and getting through it as easily as possible. So it's not exactly doing nothing. I looked a little bit deeper, into what's going on in the oil futures market, and we had on June 13th, when Israel opened up its attack. The oil trading on the futures market that next day was the second highest on record. I think the highest was like late April 2020. I remember when oil went to negative 35, and that was like all the volume on the sell side. We remember that day, and there wasn't much volume. Let's say in February 2022, when Russia invaded Ukraine, even though the oil price spiked to $125, it wasn't very heavy volume. But now there's a lot of volume, and the price isn't moving. So that's telling me that the buyers and sellers are buying and selling at equal voraciousness, let's just say, or equal eagerness. The sellers are really eager to sell, and the buyers are really eager to buy, and they both seem to have very strong cases on the bullish and bearish side. And I'm just trying to logic my way through what that would be. And the bullish side would be, well, America is bombing Iran, Israel's bombing Iran, so that's going to help. It's going to mess up the oil markets. They're going to close the Straits of Hormuz or something, and then that's 20% of the world's oil goes to the Strait of Hormuz every day. So that would jack up the price of oil to maybe like $150, $200 a barrel in a few weeks. I saw a Zero Hedge article speculating that might be the case. So what's the bearish case? The bearish case is, I'm guessing, that the Iranian regime falls. And remember, before 1979, Iran and Israel were allies. We were very close allies. We imported Iranian oil to fuel the 1967 war effort, partly. We had no problem with them. Iran wasn't involved in that war at all. So Israel and Iran have the potential to be allies, and Iran has the potential to be a Western ally. And if they are, then this whole Iranian sanctions thing goes off the table. Iran's oil capacity, if you look at their oil production before 1979 and after, it drops off a cliff in 1979, and then it's been ever since, several million barrels of oil below where it was in 1977, 1978. So you could have a huge influx of oil supply if the Islamic regime falls, and you have, the return of the Shah or some other kind of Western-friendly regime. It could really be very bearish for the oil price. It could go either way. We don't know.
During the interview, Rafi Farber explains that speculating in commodities like oil is similar to trading stocks or options. Buyers and sellers balance each other out. Farber is hopeful the conflict with Iran won't escalate into full-scale war, emphasizing that direct U.S. involvement, such as an invasion, is unlikely due to political constraints. He stresses the uncertainty ahead but hopes for a quick resolution to avoid prolonged instability. Defense Secretary Pete Hegseth said today that the U.S. attacks on Iran obliterated Iran's ability to create nuclear weapons, after details of an assessment reported that the attacks set back the program only by 3 to 6 months. Israel's military is running low on some key weaponry as Trump tries to hold together a fragile ceasefire between Israel and Iran. The shortage comes amid tensions between Trump and Netanyahu over the president's push for a ceasefire after 12 days of strikes between Israel and Iran. Let's get back to the interview.
Well, essentially, it's the same thing as speculating on any stock or option or whatever. I mean, if you're a speculator or you're speculating in the commodities markets and you're buying oil or you're selling oil, you're betting on the price. And if you're right, that means you're selling into a price spike, which helps even out the price, or you're buying into a price dip, which helps even out the price. So whatever selfish thing that you do ends up helping your neighbors, whether you intend for that to happen or not. I mean, it's like the Ayn Rand principle of selfishness, right? But it's just capitalism is all it is, and all you're doing is speculating on real consumable consumer goods. That's all, except you're doing it for your own consumption instead of to sell them for a profit. There's no difference between doing that and doing anything else that you're hoarding. I mean, people hoard assets, they hoard stocks, they hoard bonds, they hoard precious metals, they hoard whatever it might be. It's just going to be goods that don't go bad. That's what a stock or a stock is. Debt, we could talk about. Debt's a different issue if you're going to hoard bonds, but I wouldn't do that. But in a balanced economy, hoarding debt it's basically the same principle. It just depends what assets you think are going to go up. And if you think they're consumer assets, then you'll hoard. And again, you don't have to go crazy. Just have enough to not have to participate in bread lines immediately. And I don't want to give the wrong impression. There's nothing really going on here. There's no shortage of food. There's no electricity outages. Iran can't really target anything. Every so often they get lucky and they hit a high-rise building. They hit 2 high-rise buildings, and there's been a few deaths. It's been very sad, but it hasn't been that serious. Most of them have been open areas, and when they've had direct hits on houses, it usually results in nothing because everyone's in the safe part of their house. There's I don't know, I think since the 90s, building regulations have been you have to have one safe room in your house, meaning it's called a mamad here. It's that room with like 40 centimeters of concrete, steel reinforced. Every house since the 1990s has been built with that, and the neighborhood I'm in is older, so every block there's a bomb shelter. So if you don't have a reinforced room in your house, then you have to head over to the bomb shelter. But we have a 10-minute warning. It's not like when Hezbollah was bombing us from Lebanon, we had about 30 seconds. So I really didn't do anything at that point except huddle into the middle of my house and hope nothing hit. Luckily it didn't. It got close, but we were fine. But here we have like 10 minutes. So we wake up, pack up, move next door to the bomb shelter, and that's it. So I looked at the history of the U.S. getting involved after October 7th. They got involved indirectly in terms of moving a bunch of assets, fearing that Iran would get involved after October 7th, 2023. So they spent a few $1 billion moving ships around, moving planes around, and it wasn't that much of an expense relatively. We're talking about, let's say, Social Security payments were like $30 billion yesterday. It's a big difference. What I mean by America getting directly involved is, like Iraq or sending troops over and invading Iran, which I don't think is going to happen. That would ruin everything Trump has stood for. Even bombing the nuclear reactors I was against, because I think it's just going to generate resentment. That American involvement could speed up the endgame as if it really drains the Treasury's account faster than it otherwise would. And there's like $383 billion left. So I don't think it's going to happen, because they'd have to plan and scale up an invasion over the next like 3 or 4 weeks. And there's no, what could happen here is Iran responds with some kind of retaliatory strike on American bases, but they've all been evacuated, not completely. They could hit some hardware or some shelter for planes or something, but most of the big equipment is gone already. And I recall this happening when Qasem Soleimani was assassinated by the first Trump administration. I think it was what was it? Was it 2016, maybe 2017, something like that? And I heard through some intelligence connections, very secondary connections. It's not like I have any connections to the Mossad directly at all, but through the grapevine of people who say they know people up there. What happened was Iran called up the Trump administration, says, look, we have to respond because our people are expecting it. So we'll tell you where we're going to hit, evacuate now so that we can say that we hit you. And then we can, end this round for now. So I'm hoping the same kind of thing happens. And this doesn't accelerate into something much worse. It could easily devolve into a world war. And that would be bad for everyone. So I'm just hoping that whether the Iranian regime falls or not, we can end this in the next few days or a week or two. But you never know. I mean, I remember reading what's his name? The Arab guy who wrote that. Nicholas Taleb. Yeah, that's his name. And he was talking about the Lebanon Civil War from 1977 to 1990, and everyone thought that it was going to end within the first few weeks in the late 70s, and it didn't until 1990s. So that's the thing. That's the psychological pressure. You don't know how long this is going to last. Who knew that when we first got word of a coronavirus coming out of Wuhan, that it would lead to the lockdown of the entire planet and 2 years of misery? I didn't know that. I wasn't prepared for that. So I'm hoping that this ends and we don't end up in a lockdown for another 2 years or what the hell is going on. But just get this over with already.
Bank of America has raised its metals forecast, calling for $40 silver and $4,000 gold by late 2025 or early 2026. While gold continues to dominate headlines, analysts at Bank of America are increasingly focused on silver, not just for its monetary appeal, but for its irreplaceable role in industrial production. Are you ready for the upcoming bull run in precious metals, especially silver, as we move forward? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.